Hi, everybody. It's Joe and Diane with Tips on Pips. Hi, Diane.
Hey, Joe.
All right, let's talk about rule number 19. And basically, we're talking about do more of what's working for you and do less of what's not working. I don't know, that sounds pretty easy. What's the story
Sounds
there?
pretty obvious. Well, sounds pretty obvious, but it's really not because we tend to get our emotions involved. We tend to want to counter trend trade and think we know that the market's gone too far and we should be able to, you know, catch the retrace. And, there's all kinds of reasons why we do the things we shouldn't do. But we're back to following the trend, Joe. We're back to if something's working, then let's keep doing it. So, for example, we're looking at a euro chart on a daily, and we had, a horizontal move for many, many days in a row. Then all of a sudden it starts dropping, and it dropped for days and days and days. And where your lovely blue arrow is, if you go down three daily bars, you have a little 1 day pullback. But then it continues down and it continues down and continues down. And then it finally has at support a 3 day pullback. You know what, Joe? I would wait for that pullback and I would go short again. And you're not always going to catch the pullback at the right moment, but you're in the direction of the trend. So oftentimes, I think what this is also saying is if the market's telling you that's a strong downward trend and you're in it, then add to your positive trade in a pullback situation.
All right, so let's simplify this even more. If the market is strong, we buy, and if it's sell, we weak. Oh, that's easy enough.
Yeah, if it's weak, we sell absolutely. And so what happens is we get down to a support line and we think that we should be buying it because it's at support when really we should be selling it. And we should be selling it because it's so strong and everything else is telling us that it's so strong. And even the pullback isn't terribly convincing. So we want to be able to sell, and it's hard to do, Joe, because these that look overdone and over, just completely over, are usually the best ones to take. So if we sell when it's low and we buy when it's high, depending on the price action, we're going to have a lot better luck than counter trend trading.
Well, I know for me, it's frankly still a struggle. You need to be buying those new highs, and you need to be selling those new lows. Once
Yep.
again, it's a very simple rule, but when you go to practice it, it's hard to do because it looks wrong, it feels wrong. It's hard to do. So do we just do it?
Joe, we just do it.
Okay.
That's what we do.
So we
And
put
the
on our
problem
Nikes and just do it.
and just do it. And I'll tell you, you and I both know we've been at this for a long time together. And you and I both know that these rules, if we would have followed these rules in the first several years, we wouldn't have had to go through the pain, anxiety, and the cash flow that we did. But giving the rules is easy, following them is hard.
All right. Well, listen, we're going to be talking about in the next lesson the hard trade is the right trade. And we're going to dig into this a little bit deeper and hopefully find out why that's the case. But thanks for the information, Diane, and we'll be talking to you real soon.
Sounds good?